Now through May 31st, get access to 7 of our most popular products, spanning from crypto recommendations to free stock picks. Completely free for your first 7 days. No credit card required. Cancel anytime. See for yourself why more than 1 million people love Stansberry Research. Simply visit stansberryfreetrial.com.
Welcome to Making Money. This is Matt McCall. Thanks for joining me. It's May 12th, 2022. It's a Thursday. Man, we got some big news going on. We got a big show coming up. We have the S&P within a couple points of hitting bear market territory. We have the Nasdaq 100 falling more than it fell during the COVID pullback, the most that we've seen since the great financial crisis. We have airline prices going up the most ever month over month. Isn't that good news? While the market's falling, this market right now is crazy. You must listen to this episode as I break it down, get past the headlines, and then we're going to wrap the show up with 8 stocks that I found. That revenue continues to soar, yet the stocks fall. Very reminiscent of 08, 09. I'll talk about that and more coming up right now on Making Money. Again, this is Matt McCall. Thanks for joining me. It is Thursday, May 12th, 2022. It's a beautiful day outside, I got to tell you. Clouds rolling in later, but it's beautiful out. But in the market, man, oh man, what are we seeing right here? I got to tell you, I've been through several bear markets, several recessions. I managed people's money for 17 years. So it wasn't just me picking stocks. It wasn't me just writing newsletters. I was actually responsible for people's retirements. I was responsible for people's livelihoods. For 17 years, folks, I did this, starting in my late 20s until October of last year when I sold the firms. And I got to tell you, over that time frame, those 17 plus years, I learned to kind of deal with these types of pullbacks better and better every time. And the more I did research, the more I read about the history of stock market, the more I read about psychology of investors. It's helped me along the way. And I talked about this last show. If you went upstairs right now in my living room, there's probably 25 books that I will read back and go read over. I read one yesterday. I reread it. It was about 10 years old, but it talked about a few strategies during bear markets and how long-term investing has worked for literally over a century and how it's going to continue to work. But it doesn't feel like that in times like this. When the Nasdaq's down 30+%, it doesn't feel like that. When nearly half of the Nasdaq stocks have lost over half their value, it doesn't feel like the market's ever going to come back. Again, I lived through it, and it's not easy. I mean, it's extremely difficult to wake up and look at the stocks down day after day, and not just down a couple points, but getting crushed. Listen, I'm still human. I don't manage people's money anymore, but I have tens of thousands of subscribers that pay me a lot of money to come up with ideas. And when they're falling, it hurts me just as bad. It hurts me as bad when I look at my portfolio, when I look at my Bitcoin falling. It hurts. Don't get me wrong. I will say, though, over time, what's made me successful long term is you have to kind of walk away from it and not start questioning the market, not start questioning your strategy. And it's very difficult not to do that. I still question it sometimes. Trust me, when we go into bear markets, I question, what the hell am I doing? Could I be doing something else? Could I have played more golf and become a golf pro? Could have done anything, but I chose this. But again, I wouldn't have chosen anything else. This is my passion. I love it. And I know sitting here doing these podcasts, writing every single day to subscribers, that I am going to help, whether it be one person or tens of thousands of people, help them achieve their financial goals. And yes, we're going to have bad days, bad months, bad years. The best money managers in the world are going to have bad years. Nobody's perfect. And I realize that. And I realize the growth stocks I invest in have gotten hit a lot over the last 6 to 8 months. But I do know I've been through this before. I've seen the opportunities. And I'm not talking about 2008, 2009, the great financial crisis, the biggest pullback that we've had really going back to 2000. And I'm going to talk about that before I get in some stocks. But let me just talk a little bit about the market. And let's pull up where we are right now on the market. First, I'm going to take a look at, this is the Qs here, the Nasdaq 100. And we're actually up now. We're about an hour into trading here on Thursday. We're up about 0.1%. So, let's call it unchanged, slightly up. But you can see here, we were at a new multi-year low and then rallied up. So we're getting some buying on a pullback that we're seeing here this morning. Will it follow through? Who the hell knows? I don't know yet right now either. But we are starting to see a little bit of buying here after opening down big. And as I mentioned, this is the biggest drawdown. And let me zoom out in this chart a little bit here. The biggest drawdown that we have seen, even more than a COVID pullback here, percentage-wise. Right here is a bigger percentage pullback going all the way back, folks, to the great financial crisis, which it doesn't look like much on here. This is it. This is the 08-09 financial crisis. And this actually, I wasn't even planning on talking about this, but look at this chart. This looks like nothing. It looks like a blip on a screen. And look how much higher we are from there. The SPYs were down in the 20s, went all the way up to 400. Look at that huge gain. Yeah, granted, it took 12 years to get there, but holy smokes, look at that gain. And this is, again, through this, looks like nothing today. But through this, you thought to yourself, we're never going to hit a new high. This sell-off's never going to end. Stocks are going out of business. And let me just show you one. And this one always pops in my mind. It's Las Vegas Sands. Look at this sell-off in Las Vegas Sands. Fell all the way down into the pennies. I mean, it was down, I believe, around, can't remember the low. I think it was like maybe 90 cents, give or take. It went all the way back to nearly $90. So it went up 90x in the next 5 years. Even though it struggled over the last few years, it's still up 30x from that time. But what people were saying down here, folks, and I remember this. I had a friend, his wife call me, and that's when I was working part-time at Fox News and running my money management business. And she's like, Matt, what do you think about Las Vegas Sands? It was maybe $1.50, $2. I'll never forget this phone call because I didn't hear from her very much. I said, I don't know. Maybe it goes out of business. But looking back in hindsight, I hope she bought it. I don't know if I ever followed up if she bought it. I hope she did. And I hope she sold it at 90. But at that time, you're thinking to yourself, and everybody else thinking to themselves, well, this great financial crisis, we saw Lehman Brothers blow up, Bear Stearns blow up. Does this mean now that Las Vegas, nobody's ever going to go there again? Business travel, nobody ever wants to have fun. Nobody's ever going to gamble again. They don't want to go to shows or restaurants or check out the desert or whatever the hell you do out there. That's what people were feeling, that literally the world was basically ending. The stock market as we know it was over. And it wasn't just Las Vegas Sands. I mean, it was a lot of the large companies out there in Las Vegas that got absolutely smoked. WYNN, W-Y-N-N, fell from 160 down to $10 before going back to 240. So this was something where it wasn't just company specific. We were basically thinking so irrational that we thought companies were completely going out of business. And not even companies, but industries, folks, that complete industries were going out of business. Take a look at the S&P 500 here. We're down about 0.3% right now. Again, about an hour into trading. We're actually up slightly, but we opened down much lower. And again, I don't know where we closed today, but we came within a few points here. If we hit 384 on a SPYs, on SPY, that's the S&P 500 ETF, we came down to 386.92. So we came within 3 points of a bear market in the S&P 500. So very, very close. And as I mentioned, we were down over 30% on the Nasdaq 100, the QQQs a bit earlier as well. So things are ugly, and there's nothing I can say about that or do to change that, honestly. It's ugly right now. And I want to show you what investors out there are thinking. And as you can see in this chart here, this came out this morning. It's the American Association of Individual Investors. It is their weekly sentiment. And as you can see here, that's what they view the next 6 months. The one that just came out, the bears actually dropped a little bit, but still at an unusually high number of 49%, way above the average of 30%. The bulls actually dropped about 2.5% down to 24.3. Again, well below the average of 38%. So Over the last 18 weeks, the bulls have been unusually low, 15 of the 18. Over the last 17 weeks for the bears, unusually low, 14 of 17 weeks. So folks, we are seeing, again, the way you feel out there. You still think things for next 6 months will be bearish, and you still think that things are going to be troublesome. And I get it, and I understand why. When you have the market acting like it is right now, I understand how you feel that way. I want to take a look at yields real quick, the yield on a 10-year, because this was something that was a very big concern, because as the Fed raised interest rates, it did it by 50 basis points in the May meeting. Likely the next two meetings, June and the next 50 basis points each, which would be up to 1% more if that's the case going forward. And that obviously will lead to the 10-year yield moving higher. As you can see in the chart here, we went above 3.1 right after the meeting, and then we've been falling. And the reason for this is we're seeing people actually buying the bonds that are spooked. And again, this is kind of a sign for me in the near term that I think we could be really close to a bottom here in a sweet spot. Again, we could continue to pull back for 2 months and I wouldn't be surprised. But some of these indicators are really starting to tell me that money's coming into bonds again, which it has not been for a very long time, especially with bond rates expected to move higher. We are seeing money come in because there's a fear factor. They're just so concerned they're getting out of stocks and now moving into bonds. So that's something I'm going to keep an eye on. I'll continue to talk about. Let's talk about valuations. We now have the forward PE ratio for the S&P 500 around 16.5. Typical market bottoms, major bottoms, have the PE ratio around 14 to 15. So we're at 16.5. We're not far from there. Could we continue to fall to 15? We could. I hope not, because that means the S&P pulls back another few hundred points. But we could fall to that. I don't see this as the same as 08, 09. We're not in a situation where liquidity is a major concern. I don't see any major financial companies going into business. Matter of fact, corporations and banks are sitting on more cash than ever. It's not 2000, 2002. We're not at a huge tech bubble. We don't have valuations on the Qs, on the Nasdaq that were above 100 PE ratio. We're not at that level either. So we're not, those aren't comparable to where we are today. Were we in a bit of a bubble with the Fed? Sure, but it's burst. So I think, we're very near that sweet spot on that pullback, pulling back. I kind of look at the market when things are going up, and 09 through basically 10 years after that, market kind of went straight up, a couple of pullbacks along the way. You're throwing darts, making money and winners. Right now, I feel like you're throwing darts if you're trying to pick stocks that are going down, because almost everything's going down. It's absolutely bananas. You're seeing earnings come in that are blockbuster and the stock's down 20%. I mean, some of these companies, Roblox, Unity, which are two big players in the metaverse and future of gaming, getting absolutely smothered. You're trying to tell me something the metaverse isn't going to be there? You're trying to tell me online gaming is not going to be there, interacting in that way in Web3? You're crazy. Absolutely crazy. So, but again, we are rational in the short term, and that's what we're seeing. Extreme irrational behavior right now. One more thing I talk about before we get into some stocks is inflation. And food and beverage prices are up 21 months in a row. Food at home, so eating at home, up year over year, 10.8%. It's the most ever. So we're feeling that. Like anybody who eats, which is everybody, or you can't live, is feeling that. I buy the groceries. I cook at home quite a bit. I know. I also go out quite a bit for dinners. I mix it up a little bit of both because I travel a ton. So I see prices. I don't know if I said this last week, but I went to my local gym, which I go to several days a week, and they have a nice little cafe connected to it. And I grabbed a protein shake on the way out, just a 16, 20 ounce protein shake. I was amazed when I got the bill for this protein shake, folks, which I can make at home, but I was just lazy that day, and this one sounded good. It cost me $15.69 with tip, or with tax. With tip, I tipped her $2, so it's over $17.50 for a protein shake. Granted, it's in a nice area, it's a nice gym, but that is absolutely bananas. And there's bananas in it, but that's absolutely bananas. But a lot of that has to do with the food costs, their input costs into that costs more. That's crazy. So, a lot of people say people who are in that 1%, which I am, and I'm proud of it, don't feel inflation. We do. Is that going to change my life? No, but I'll probably I have made my protein shakes at home for the last week because I could probably make it for about $3 a charge, making it at home. And they're just as good. It takes 5 minutes of my day. And again, so you're starting to feel that. So I do see inflation. I get it. I understand it as well. Airfares, month over month, biggest monthly jump ever, folks, up 18.6% on airfares. Now, could that be because they're passing along higher diesel or airline fuel costs? Sure. Jet fuel? Yes. Could it be because demand is increasing? That too. They cut down some of the amount of flights and they're full. I'll be flying this evening. I'm flying this evening to San Diego to actually speak at a AAII, American Association of Individual Investors conference this weekend. So I see it. I'm on a plane more than most people in the world. And they're packed all the time. It's unbelievable how packed they are and the prices are going up. So that's what tells me something. If the world was so bad, and especially this country and economy is so bad, would people keep traveling? No. Businesses would be cutting back. They wouldn't be sending people like me to conferences and things like that. And conferences I go to are always packed. The last year, they're mobbed. They wouldn't be going on vacations, people, but they are. So again, you see mixed news coming out of the numbers that we see and the way the market reacts. Let's talk Disney for a minute. Disney, I don't own a stock. I don't have any really view on it, to be honest with you. But Disney stock is now down 50%. This is going to be the biggest pullback in Disney stock that we have seen going all the way back, again, to that great financial crisis. And let me show you a chart here. What I find really interesting is this. Let me pull it up. So it shows us down. This goes back to January of 2021, this chart right here. So going back January 2021, kind of coming out. I mean, it was still kind of in the heart, really, of the pandemic, but we've come out of it since then. The stock here you can see is down 45%. In the same time frame, revenue, we don't have the most recent one that was in there, but revenue is up 34%. So even though revenue continues to go up, the stock has now lost half of its value. I saw a lot of this in 08, 09, which I'm going to talk about in a minute, where there's this disconnect and it creates great buying opportunities. A couple other names, Amazon, down 40% in 30 days. Apple today moved into a new bear market, down over 20%. So again, I go back to 08, 09, and I was running my financial firm. I was writing newsletters, and I was also on Fox. And I remember going on March of 2009. I can't remember the date. It might have been March 9th, somewhere around there, 8th and 9th. It's a day the S&P 500 hit 666, intraday low. It's crazy and freaky. Before we bottomed during the great financial crisis. 666 low, nuts. I went on a show. I was with, I remember it was Tracy Burns and Chris Cotter, who Chris is now at ESPN, I believe. And I released what I called the Andrew Jackson portfolio. I think it was 8 or 9 stocks. I think it was 8 stocks. Could have bought one share of each stock for less than $20. And Andrew Jackson's on a $20 bill, and that's why I called it. It was like $19 and change. And I remember saying, I don't know if this is the bottom. And some of these companies may go bankrupt, but all you need is a couple of these to do well. And this is going to be a huge winner. That portfolio, 2 did go bankrupt. Eastman Kodak and General Motors went bankrupt. Some of them did well. One was AMD, which was below $1 at the time. AMD, Advanced Micro Devices, below $1 at the time, was up above 160 in November. Now it's down to 86, but above 160. So it was a 160 bagger from the low to the top, around, give or take, around there. So yeah, I felt great fear at that time, folks, but I also saw a great opportunity because I started looking at stocks and seeing, okay, a lot of these companies, the revenue continues to move higher, but the stock's down 70, 80, 90%. So I took a calculated, I don't say guess, calculated strategy and did a basket of stocks. And I knew a couple of them wouldn't make it, but I didn't know which ones. But I also knew only gonna have a couple do well and you would have made a ton of money. And it did. That portfolio was up huge over the years after that. So I feel the same way right now. I feel there's a lot of great companies out there. So what I want to do, and again, none of these are buy or sell recommendations, folks, but I have a couple of companies I want to look at here that are showing great growth, but stock getting hit. So let's take a look here. First one is Progeny. PGNY is a symbol. And this is looking at January of 2021 through yesterday's close. Stock down 21%. However, revenue has increased by 72%. If I just scan in, I go all the way back to January of 2020. That is right before the pandemic. So I'm getting in a little bit of both here. Revenue's up 164% in that time frame, yet the stock is only up 20%. A bit of a disconnect. And that's actually pretty darn good. The stock's up 20%. A lot of stocks are down, as you'll see. But this is a company that's a leader when it comes to reproductive health. I talked about the stock in the last week or two. A lot of people women are freezing their eggs, having children later, trouble getting pregnant later in life, just what happens. This company helps with that. It facilitates and helps that process. So that demand's only going to increase. You can see it in the revenue numbers. So for me, man, oh man, it's tough to ignore that. Now, let's take a look at another company here. And this is one I've talked about a lot in the past. And this is the leader in telehealth, TDOC, symbol TDOC. Goes back to May of 2020. And you can see revenue up 134%, the stock down 83%. There's a disconnect there. Was the stock a bit overvalued because it ran up so much during the pandemic because there was such demand for telehealth? Yeah, I agree. But revenue continues to move higher. Yet the stock is getting crushed. If you would have told me before the pandemic happened that revenue would be right here where it is for TDOC, yeah, it may not have been as high as it was during the pandemic, but down 83% from that time frame is absolutely crazy, folks. It's hard to believe, but there are these disconnects, and that's what creates opportunity. So I had a couple more here for you. So what about Li Auto? Symbol's LI. It's one of the big three electric vehicle makers out there in China. As you can see here in a chart going back to January of 2021, revenue up 165%, stock down 30%. One of the leaders in electric vehicles. Zoom out a little bit more, and I go back to April of 2020. Revenue's up 1,200%, over 1,200%. The stock is only up 22%. So again, there's this disconnect, folks, of what's going on. There's this disconnect of looking at companies that are in huge trends, that are doing well, yet the company people want to buy the stock. And that happens because in the short term, the markets are rational. But what you have to do is be a vulture, be the wolf, go in and buy like this. I don't know, again, if this is a pullback in these stocks and the bottom, but there's great opportunity here because if revenue keeps going up, that stock price will catch up to it. And that history shows that. The next one is in a sector that you guys might like, and this is marijuana, cannabis. And this company just came out with earnings this morning that were blockbuster. This is TrueLeaf. TCNNF is a symbol. And this trades over the counter because, as we know, U.S. Cannabis companies can't trade on major exchanges yet, which is bananas. But going back to January of 2020, revenue's up 283%. Stock's only up 15% and well off the high. Again, there's a disconnect here. If I look at just January of 2021 till now, stock's down 57%, yet revenue's up over 81%. Again, folks, you may not like cannabis, but you look at companies like this, and there's going to be some winners. And I think TrueLeaf will be one of those winners. And again, how do you find these? You look at companies like this where you see the top line growing, and the bottom line just doesn't match up to it. Let's go to another one here. NTRA, NTRA. This is a company that's a medical equipment company. Going back to January 2021, stocks down 71%, yet revenues up over 72%. Go all the way back to January of 2020. Stock down 16%, revenue up 133%. Again, folks, this is very tough to ignore when you have revenue going up like this and the stock is not acting the same way. Eventually, it comes back and meets in the middle. Take a look at another one. This is Figs. They make the super cool outfits for people in the medical industry. Look at anybody, they're wearing them. Going back to January 2021, revenue up nearly 43%, stock down almost 59%. Again, a disconnect. Does not make sense. And let's take a look at one more here, and this is going to be Caesars Entertainment. which is a play on, obviously, Vegas gambling, also on sports gambling, which is blowing up right now. Going back to January 2021, revenue, even though it's dipping a little bit in the last 3 months, still up 45%, while the stock's down 34.5%. Going back to January 2020, dealing with a pandemic where a lot of things were shut down. Revenue's up 287%, stock down 19%. So, folks, what I'm getting at here is we have a situation where opportunities are in front of us. And for the 8 stocks I just showed you, I could show you 80 more. So right now, I'm not saying run out and buy today. Nothing here is a buy or sell recommendation, but you want to start getting that watch list ready because this will be a great buying opportunity, whether it's today, tomorrow, or 2 months from now. But you want to be ready when that happens because you're going to be very happy in 6, 12, 18 months from there, 5 years from now. Very similar to 08, 09, very similar to 2002 if you were buying then. Looking at a few years, you would have been extremely happy with where you were. So before I wrap it up, let's take a look at the markets here really quick. S&P's now about break even. So we're coming back a little bit here, trading near the highs of the session. And we'll take a look at the Qs. The Nasdaq 100, now up 0.3% near the high today. Heck, maybe this is the bottom. I'm not calling it, trust me, but maybe it is. But I will tell you, stick to your guns. Invest in good companies. This is part of the market. This is part of being a long-term investor. And if you can't handle this, you're not going to be successful. The ones that can get through this will be the most successful. Just like companies who make it through recessions and come out on the other end are the most successful. Be that investor that comes out on the other end of a bear market, and I guarantee you, you will be successful. Thank you so much, folks, for the support. Thank you so much for watching. Again, deep breaths, spread the love. If you're not feeling it, say hello to somebody in the street. Give a loved one a hug. Tell them you love them. The market will be there tomorrow. Don't worry about that. Hope everybody has a great weekend. We'll be back Tuesday. Thank you so much for watching. I'm Matt McCall, and that was Making Money.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.